Good morning. My name is Emma Gonzalez, and I'd like to welcome you all on behalf of the SBDC Silicon Valley. We're here today, and we're excited to be part of this program. And I'd like to introduce Franklin.
Good morning. My name is Frank Haggas. I'm with HSBC Bank here in Cupertino.
Great.
Happy to be here myself.
Great. So we're here to speak about access to capital and the different ways to do that. But we were brainstorming a little bit this morning, and what I'd really like to do, if it's okay with all of you, is take a quick scan of how much information you would like, because there's people at different levels, right? There's startups who, what do I need to just start my business? From what are the basics that I need to take into the bank when I go talk to them about banking? So how many of you have ever received financing specifically for your business from a bank? Okay, so we're looking at maybe we're using angel investors or self-funding our businesses. Is that right?
How many are self-funding in the audience by a show of hands? Okay.
Okay, great. So that gives us a great idea on where to take it from there, okay? So let's get started. So you can go continue on. So what we're going to talk about is preparing to seek for financing, creating that financial proposal, what it should look like, the C's of credit, and we have a breakdown of that, and developing a good banking relationship. So where do you get the money from? Where does it come from? Well, many of you just answered that question. You're self-funding. Well, we'd like to help you get to that point where you can take it to the next level and you can go and get some support for your business to be able to grow it, hire additional individuals, add to your inventory. So there's different directions on how we can do that we're going to talk about. Okay, so go ahead and you want to go.
Sure. As we help you to prepare to seek financing, we want to help you identify how much money you're going to need and what sort of the processes are around defining what money you will need and how you can go about getting it. Also, the sources outside of the bank with the SBDC and other microlenders that are here in the community that have programs that you can take advantage of. And we want to give you a sense for what you're going to need to have prepared when you go and approach these sources of funding. So these are very relevant questions to have answers to. Whom should I be asking for money from? You know, at what stage of my business am I in, and as a result, who should I be looking for funds from? What does a banker like myself or a microloan provider want from me, and how do they approach the decision making? These are very sharp tools to have in the toolkit when approaching a banker or a microlender. If you can answer these questions and have framed your presentation in response to these questions, you're going to be much more successful. These are also important to know. What types of businesses does a bank or a microlender particularly favor? If you're asking for money from a bank or a microlender that doesn't have any interest in your particular type of business, well, then you're barking up the wrong tree. But if we can help you get prepared and give you the information to help find the resources and the people that are more interested in your type of business, that's what we would like to do. Also, it's important to know how long it's going to take to get funding. If you want to bring somebody on next week as a new employee, and it's going to take 2 months to get the funding, obviously you want to put these things together. Oh, this is for me. As a banker, additional questions for me. What type of business services do I offer outside of just giving loans or taking deposits? And there are several other ancillary services that banks pride themselves on offering, and we'll get into that. Does the bank make SBA guaranteed loans? Most banks do, but those are resources that as a new or as a relatively new business you'd like to make sure that you can take advantage of. And are there other government programs like the SBA that you could take advantage of as well? Here we are. That's right. We'd like to, in some cases, your business may want to take credit cards for payment. We want to make sure that your bank or your microlender can point you in the right direction in that regard. And the line of credit, as everybody understands, is probably very, very helpful in getting your business off the ground. Would you like to take this one back,
Okay.
Emma?
So with microlending is kind of the first step. Many people, when they come to see us at the SBDC, their first question that they're looking for is, we need money, can you write me a check? We wish we could, but unfortunately, we don't have funds to lend. What our goal is to be able to prepare you to get ready to ask for money from a lender at the lowest possible price, or whatever alternative lending is out there that you would be able to qualify for.
Emma, may I ask a question here? I want to ask a question of the audience, and I want to know if anybody has heard of or is aware of microlenders here in the Bay Area right now. That is a fair perception to hold. Yeah, I volunteer my time with one microlender in particular. There are several. I work for HSBC Bank, but I volunteer with TMC Development Working Solutions, and that particular microlender gives loans up to $50,000 to businesses that are starting out or have a year or two under their belts. Exactly. It's information that isn't widely dispersed, and it's something that, as a member of that organization, we're trying to communicate. Another source would be the Opportunity Fund. There's the East Bay Development Network. There's several different micro loan solutions here for businesses, which completely deviates from the idea of maybe a Kiva loan or helping to get water in sub-Saharan Africa. So so those sort of resources are available to you. But we'll continue and get back to that. Oh, here, I'll hand you mine while I fix that.
Thank you. So, landlord financing. We've been able to help clients negotiate when they're wanting to buy their business and they've been leasing for several years. And all of a sudden, the owner of the property wants to sell. And the client is not in the position to be able to buy that building outright or be able to go and get traditional funding from a financial institution for cash flow reasons or a number of other reasons. We're able to help and step in and help negotiate some of that process with the owner of the building to help perhaps do a rent-to-own type negotiation. So we have folks that can help you in that capacity, or folks we could point you in the direction that can help you in that capacity. My boss, I picked this up from him, use other people's credit. He calls it the 3 F's, friends, family, and fools, right? We borrow from family, we borrow from friends, or we're using our own resources to be able to fund our business and then hope to pay back. And I have been successful back in my experience where I've helped clients wanting to start a business. They've either A, had to take an equity loan out on their own personal property, or B, take a loan on their 401k to be able to get their business started, and then they just paid themselves back, right? They made installments to themselves on a monthly, quarterly, or annual basis. And then again, contract financing, which is if you need equipment for a machine shop, you can get a loan for the leasing. And those sometimes are easier to negotiate because the banks have the machine as collateral, and the rates are pretty reasonable.
That's right. It's one of the C's that we're going to talk about is collateral. Certainly. In addition, some other unconventional financing techniques can include concession sales, where you're doing things in stages. Excuse me. You have the retailer sublease part of the real estate to complement your business. There's staged financing, which is a term I'm not necessarily very familiar with, but obviously it implies that you're getting funding in tranches as your business develops. That's an interesting idea. Buy a business instead of starting one from scratch. Now, if anybody in this room is considering buying a fully fledged business right now, I think the one thing from the bank's perspective that you would need to be able to demonstrate is that you, A, had a great awareness of that business and could take on the responsibilities of the reins of taking the business forward from where it was right now, but also we're able to inject some capital into the acquisition, which, if we're talking about microlending and starting businesses, it might not necessarily be in the same scope.
I'd just like to interject a great success story that, well, I'm hoping is going to be a success story that we're working on right now. One of our clients who's been an SBDC client had a cabinet making business for the past 15 years and has been a client of the SBDC Silicon Valley for the last 5 years. They're ready to retire and start traveling. Well, one of his employees who's been a key lead in his success of his business wants to buy his business. So now we're being introduced to this employee as a client to be able to assist him in purchasing that business. So talk about relationships and being able to help folks make that transition. This is where it's the key success that we should see based on the relationship. And we already know the success of that cabinet baking business because we've been in relationship with them for the past 5 years.
That's right, and that same story could pair over to the bank involved in the transaction. It's that experience from the employee who would like to take the reins. That sort of experience is going to be very relevant to the banker in making a case. And in that case, we would probably use what's known as an SBA 7A loan to help that customer or that person buy into the larger business and take it forward. And of course, there's small business incubators. Of course, the SBDC being a supporter of them, and there are also several up and down the peninsula, especially this being Silicon Valley. There's quite a few business incubators, especially for businesses in the tech space. Creating a financing proposal. Take it? Yep.
So we have to tell a story about your business. We have to make the lender become as passionate about your business as you are. So part of our role through the program of the SBDC is we ask pertinent questions. We'll talk to you about your business. We want to learn about your business, find out what your goals and objectives are, and then we help you, we guide you to put this information together. So basically, what is it that you're looking for? Tell us about your business. What is your financial request? What is it that you need? What are you going to do with the money? You're going to buy real estate, you're going to buy equipment. What is it specifically that you need? Is there collateral involved? Again, what's the return on the investment for the investor? And a business plan. One thing I've learned through experience in my 30 years in the financial industry, many business owners believe I have to make a business plan. They make their business plan and then they file it in a drawer and then they never look at it again. A business plan is a living, breathing document. It should be evolving with your business as your business is growing, and it should be able to be changed as easily as just making a few line changes on the document. Because anytime you go talk to anybody about your business, one of the first questions out of their mouth is going to ask to see your business plan. And if you haven't talked about it in a long time, it's going to be kind of awkward for you. Many business owners or potential business owners will pay $500, $1,500, $2,500 to someone who writes professional business plans. And that is fantastic. That's great if you have the resources to do that. But what I would encourage you strongly to do is to take the time to write it yourself or to work with that person, because nobody's going to be as passionate about your business as you are, and no one's going to know your business as well as you do. So if you're asking someone to write it for you, they're number crunching, they're pulling demographics, they're doing all the analytical things that need to get done, but their heart's not in that business plan. And if you put that together, your heart's going to be in there.
I want to echo some things that I heard just then, and that is from a banker's perspective. The reason I do what I do is because I'm passionate about getting small businesses off the ground and onward, and I'm not smart enough to do it myself. Like I don't have the, I guess I don't know how to build the next mousetrap, but I can give you the money to make the mousetrap. So and in doing that, I see that the most important thing that's relevant to a bank or that's relevant to the microloan provider is that story and your ability to communicate that story, especially at the microloan level, where you're coming in and you want that first $50,000 so that you can bring on that additional support that's going to help take that business that you're running to the next level. And and your ability to communicate not only just the story about how you decided to build this mousetrap, how this is going to be the next big thing. That's relevant, that's very well and good, but I think that it's equally and perhaps even more important to be able to describe how you're going to be able to return the funds that you're borrowing, how this particular device, this particular idea, this concept or this service that you're selling is going to attract new buyers, is going to keep those buyers, and will sustain itself going forward such that you should be able to borrow more than $50,000. You should be able to borrow $100,000 or $200,000 because this is going to perpetuate itself and grow, and you need to be able to point to the numbers and say, this is why. And you need to be able to point to yourself and say, I know why. And I know why because I've been doing something similar for a couple of years. Or I know why because my experience at this other major employer has given me the experience to understand what I'm doing. Sir?
Are you going to speak to tools like Kickstarter and similar things like that? Are they part of the microloan?
I can, and if you'll forgive the bias, I can give you the perspective from the working solutions aspect. The Kickstarter is an interesting, is a great concept, not just interesting, it's a great concept. But there are a lot of ideas that have a lot of merit that fall and fall by the wayside because they don't get enough donations into the system. So when you have a microloan or a microloan provider like Working Solutions involved, you can, for smaller loans up to $10,000, you can still, excuse me, go ahead.
Sorry, I didn't make it up. Could you repeat the question or someone's question?
That's a fun, yeah, excuse me. The question was, are we going to speak to the relevance or the importance of Kickstarter in getting businesses off the ground and giving businesses the initial funding that they're looking for? Did I have it right, sir?
Yes.
Great, very good. So in response, yes, that is one avenue that I encourage you to pursue, but I also encourage you to look for, I even call them more traditional sources of microloans at Working Solutions or Opportunity Fund, that in the smaller amounts, the $10,000 and under, will apply a similar model where they use Kiva to do it, to get a sort of a donation model, but they don't have, the idea doesn't fail if it doesn't accumulate sufficient donations. It simply just gets a loan for the rest from the entity that's backing up the microloan. So lots of information, maybe not as specific as you'd like it to be, but that solution is out there, and Kickstarter is highly relevant for new businesses getting off the ground. Other questions before we continue? Please.
So with Working Solutions,
Yeah, with Working Solutions, with microloans, are you going to get into a little bit more details about how you go about setting something like that up, so that
The process.
the process for actually setting up a microloan program, and what are the requirements? I mean, Kickstarter requires a video, they require some other information and so forth to be accepted in their system. What do you require to do a microloan, to get a microloan, excuse the expression, kick-started?
The expression excused, of course. There's a reason why that name applies. No, okay, let me tell you a little bit about the process. The reason that Kickstarter, and I'll answer it in this way, the reason that Kickstarter requires a video is because that's an effective way to communicate the story. So we've already underlined that, number one, you need to have the good story, and that story needs to explain repayment, also your experience, and the concept that you'd like to have funded. But in preparation for a Working Solutions loan, maybe you're just starting, maybe this is your first year, maybe you've never done what you're doing before. And at that point, the story becomes paramount. But maybe, conversely, you have a year or two of having pursued this objective, having sold this service, having made this widget. And you want to be able to use appropriate accounting methods to show that you've done it in the past 2 years and present that to Working Solutions, to another microloan provider. Because in the same way that you would approach a bank after having been in business for 2 to 3 years, you're going to need to be able to document that historically this concept, this business, has made money, and not necessarily made money and then spent it all on expenses and is turning a loss. Because in the same way that a bank would like to see that you've generated a profit with what you're doing, a microloan isn't an angel investor or somebody that just is going to believe in the concept without proof of repayment. So, the process. Gather some historical financial information for however long you've been in business or however short you've been in business. Make sure that you clearly are able to understand or to communicate the story of your business, the hows, the whys, the whos, right? And be prepared to sit down for a month and at sometimes 6 weeks to go through the process start to finish with a representative at each of these, and I know that Opportunity Fund, but also at Working Solutions, the representative, once you've turned in this information, this initial information, will sit with you and help you drive the process all the way up to loan committee, where you will present your story in total to 20 people, and they will make a decision on the spot. And then you will walk out of there either with a plan to get a check or a check in hand to hire that new person or take that business to the next level. 2 questions, lady in the white first.
I have, when you get this loan, how long, what's the term for the loan? What kind of interest do they charge? And if your business goes belly up, do you still have to return the loan, or how does that go?
Good questions all. Terms for the loan, pricing and interest rate for the loan, and if the business doesn't succeed,
Right.
what happens then? And this, I presume, is in the Working Solutions or a microloan scenario, correct? In any scenario. Okay. So from the microloan perspective, the loan is made to you as an individual, but also as the business. So as an individual and outside of the business, you will be guaranteeing the loan. So I'm going to answer the third question first. If the business does not succeed, yes, you will be expected to repay the loan. And terms are people are very flexible with how they work out repayment. But going back to the more nuts and bolts.
Interest rates?
Exactly. Going back to the nuts and bolts, interest rates in terms of loan. The loans are up to $50,000 as far as Working Solutions is concerned. And the interest rates are between 6% and 9%. Oh, excuse me, and how long do the loans last? You typically given 5 years to repay the loan. Interest rates from 6 to 9%, 5-year terms on the loans to $50,000.
Now, it's my understanding that most businesses take 3, 5, 7, even longer to make a profit. So it sounds like you can't get a loan unless you're being somewhat profitable. So what's with that?
It's a fine question, and it's not necessarily a loan fund that isn't expected to be repaid. We need to be able to demonstrate not only in a bank, and I'll answer from the bank's perspective. In the bank's perspective, the depositors are essentially the shareholders and need to be able to be assured that I'm going to lend out money that will eventually be repaid. And that's the logic behind evaluating historical performance to see if the business is making money. Now, applying that same concept to the microloan scenario, there's a higher expectation of failure, and or I like to call it lack of success or delayed success. And that's why the story is more important. That's why the who is more important, perhaps, than it would be to a bank. But the same principal tenets apply. So if your business is in its infancy and hasn't generated a profit or isn't generating the sales that you anticipate that it'll generate 5 years down the road, yes, this microloan is designed to get you to that point, and you need to be able to clearly state why it's going to get to that point. And that's why, instead of being formulaic, as some of the bank loan processes are, it's very subjective. And you personally, as the leader of your business, are going to make that case to the people making the decision. Whereas in the bank's world, that's my job. I interview the business owners and get an understanding about the principal tenets of the business and why it'll be able to repay the loan. And it's my job to advocate for the customer in front of the loan committee. And you don't get the chance to present your case. And if I fail and you don't get the loan, well, then you're mad at me. But if in the microloan scenario, if you're making your case, the microloan committee will be able to tell you, well, wait a second, what about this? And you can respond quickly and hopefully succeed in getting the loan. Did that answer your question?
Yeah, there are usually startup costs and things.
Of course. And that's why that's why when we talked about the sources of funding, including FF&F, right, friends, family, and friends and family, those are the sort of expenses, the startup costs that they are anticipated, or you personally are anticipated to shoulder. And then once that concept has been proven, even if it's only been proven to the first dollar of profit, that's when a microloan can really drop the gas on the fire, so to speak. Other questions before we move on? Yes, ma'am. No apologies for questions accepted.
3 years tax return, are you talking about your personal tax return?
In the case of a business that's just getting off the ground, yes, that would be your personal tax return because there's a personal guarantee. And the question, again, for the crowd is, the requirement that's generally listed there is generally 3 years of personal tax returns or business tax returns if the business has filed them. But if I'm just getting my widget operation off the ground, and my information is on my Schedule C as for my tax return, then that's what I'm going to want to show. But if I'm just at square one and I haven't done anything with regard to sales or expenses for my new business, then it's all just going to be conceptual. And I'm still going to produce my personal tax return to show evidence that I've been able to make money in the past doing X. And by doing X, I have the expertise to create Y, and that's Y is my new business, right?
And the other thing is, what's the difference between that and a venture capitalist?
It's a fine question. The difference between a microloan and bank financing and the venture capital world. And angel investors, which I'm going to put together in the venture capital world. The key difference between those two worlds of sources of financing is principally equity or ownership. The venture capital and in some cases the angel capital are going to invest in your business, and I use that word as opposed to loan you money, because they're expecting a return, and that return will either be a ginormous percentage of your, forgive the word, of your profits and your ongoing income. Or maybe a percentage of the ownership of the concept if it's a novel idea. A bank isn't interested in that. The bank would like you just to sustain your business going forward. So that's the principal difference between the two worlds, is ownership. Sir, in the back, and then we'll go over you. I'm going to go red first.
Very good question, sir. On the microloans, how does one go about learning about this and accessing these microloans?
How does one learn about accessing microloans? Well, just again, if you'll forgive the bias, I would point you to tmcworkingsolutions.org and have you and other websites that support that. The Opportunity Fund has its website, which unfortunately I can't rattle off the top of my head. But but I would Google Bay Area microlenders, or Bing Bay Area microlenders if you prefer, and go to each of the websites, because the process is very clearly outlined as to what each of those microlenders is looking for on their websites, essentially. But it isn't very much different from what I'm talking about here. But good question. How does one do it? Sir?
So as I have a question with regards to as an alternative, can microlending be used as an alternative to factoring? So let's say, for instance, you have a business model where you have an order, you have a purchase order to build 30,000 units of a widget, but it's going to cost you $70,000 to do that. You're going to sell, but the purchase order, you're clearly going to sell it for twice that amount. So you're going to have ultimately a revenue of the purchase order is for $140,000, but you need $70,000 to produce it. But you don't have that $70,000 to produce it.
So
can you take that purchase order? Is that story in itself, without the detailed business plan and all that? If you walk in and say, I need a microloan for this $70,000, I got this purchase order behind it. Or is that more of a bank? And also, is the 6 to 9% a better rate than, let's say, the factoring rate, which is probably higher?
Well, it may or may not be. That's a fine question. Let me repeat it. Essentially the difference or the merits between choosing, and is there necessarily an exclusive choice between factoring, which is using invoices to finance your activity, or getting a microloan, which is more general, or getting a bank loan, which would fit in the same bucket, again, general. for the business. And I'm making that differentiation because that is in fact the answer. The factoring, the story is that one invoice. The story is, I'm going to make this, it's going to cost me X, but I'm going to sell it for X plus, and I'm going to turn a profit, but I don't have X yet. I can't, and so the factor comes in, the factoring source of financing comes in and gives you the money to produce it on the basis of that invoice.
And I'm just going to interject here real quickly. Frank's covering a lot of great points, but also the Small Business Development Center is able to help from A to Z. So if you're getting prepared to go to a traditional bank, we can help you prepare that business plan. Make sure that you have the answers to their questions when you walk in the door and sit in that chair. There are several of us that are advisors that have 30 plus years of financial experience behind us that asked those questions. So we're able to help prep you with what you're going to be asked and what you need to be able to bring to the table, so you're going to awe that banker when you're sitting in front of them for that first interview session. And all the way down to the microlending, we can help you prepare for that as well and kind of point you in the direction of, well, this, for what your particular need is, this microlender might be better. Or this one might be better depending on what the need is. So our experience is there to help you, guide you in the direction that you need, so you're not out there fishing, right? Trying to figure out, where am I supposed to go from here?
Right.
So that's one of the services that the Small Business Development Center provides.
That's right. And in the process, they'd probably explain the difference. But just to redress the principal difference between factoring and microlending, that story for the factor is the invoice, and that financing is specific to that particular transaction. And a microloan or a bank loan, again in the second world lumped together, is specific to your business, where the story of the business itself and all of the invoices is more important. And the fact that we want to sustain all of the activity, not just that particular transaction. And also, it might not necessarily be about, although it could be, about buying the inventory or supplying the labor for that particular transaction or ongoing transactions. It could also be about bringing on a new employee, because job creation is so important. And it could also be about buying or renting your real estate, your location for sustaining the business on a go-forward basis. So think about microloans and bank loans in that general and sustaining bucket, and think about factoring as being this invoice and this particular transaction needs to happen, is going to put money into my pocket, and I'll put a little bit of money into the factor's pocket just to make sure that it happens. Again.
But as a follow-up, would a microloan be possible?
You're right.
To get a better rate, including the traditional factory?
Not just to follow, but the actual original question. I'm sorry, I didn't answer it. Is it exclusive? Am I getting it right? The question is can you pursue both, or is one more favorable than the other? And does one cost more than the other? The answer to all three is that it really depends. And a factor is going to take as much as 10% of the transaction, in some cases, depending on how risky the transaction is, or it could be smaller. But on a microloan, because the idea is that, and a bank loan, because the idea is that the business will repay the loan over a period of time, you'll know that the interest rate is, as I said earlier, 6 to 9% for microloans, or less for bank loans, because it's a different model and a different purpose for the loan. That brings up another point. If I could just take 30 seconds to quickly say that the purpose of the loan is important to the source of the funds. In this case, for me, the bank. I need to know what the purpose of the loan is, and that helps me choose which solution I'm going to provide. And it would be equally important to your SBDC advisor as to what do you want to do, so that they can point you into the right direction.
Okay, sure. Let's say I wanted to buy a franchise, such as Subway.
Subway, sure.
All right, or whatever.
Yeah, not a Quiznos. High failure rate there, but go ahead.
Pardon me?
I was teasing. I said not a Quiznos. There's traditionally a high failure rate with Quiznos. You were asking about buying franchises, for those that didn't hear. But
Yeah.
I was just kidding. Go ahead.
I know my husband doesn't go there anymore either. But
Yeah.
considered a small? Because the franchise costs, I don't know now, I know they're very expensive.
Some of them are, and some banks have special relationships with particular franchises, and it's either Burger King or McDonald's has a very close relationship with U.S. Bank, and so that if you were acquiring or interested in acquiring a franchise of Burger King's or McDonald's, one or several, that you could get a loan for that purpose from U.S. Bank, and the franchise, the person that's selling you the franchise could actually point you to that direction. Those transactions typically are fairly large, especially for the big names, and not necessarily. And while they still fall into the general world of small to medium business,
I was gonna say, is that still a small business? Because it's really a small business, like,
is
it's a little store, right?
the question is it really a small business, a franchise of McDonald's or Subways? And yes, the answer is yes, it is. And it remains a small business. I forget what the SBA's definition is, but I think it's up to $40 million in revenue for the business entity itself. It may own one or several McDonald's in this scenario, but it would still be classified as a small business. I think there's an employee number.
Right, yeah,
It
also.
might be less than 120 or something.
Yeah. So, and many of the franchises that you're interested in, once you start communications with them, they're very forthcoming in telling you, these are the banks we work with, or these are the organizations we work with, and they'll point you in the direction, and they usually have a contact in your area that you can go to, and they'll give you a list of deliverables that you're going to need to take to them. And again, that's where we can step in and help you make sure you have all those deliverables in place to take to the bank that they work with.
Emma, do you want to?
I did.
Okay.
So, to be respectful of everyone's time, we have about 15 minutes left. So what I want to talk about quickly, and then we'll just kind of keep going, is we talked about the C's of credit. So I'm just going to highlight them very quickly. It talks about character, trustworthiness of the owner for business. Again, that talks about your credit score, right? Are you responsible? You make your payments in a timely manner. Capacity, and Frank talked a little bit about that, your ability to repay, right? If you're starting a brand new business, the lender, no matter who they are, whether it's a bank, a microlender, or a VC, they're going to look at your ability to pay them back if the business does not work. Collateral, is there equipment? What is there that we can do? The economic trends of the business that you have, and again, the capital. Are you committed? Are you going to be able to the business? And that, again, speaks back to the business plan, right? Your passion about your business.
I want to call out several of these that are the most important and specify to which capacity they're most important to. So I'm first going to speak from the position of the bank. I'm a business relationship manager, and so my job is to give small business loans. And when I look at it, number one in this scenario, or the twins are the capacity and the collateral. So from the bank's perspective, those are the most important things. Does your business generate enough money to repay the loan you're asking for? And what is our alternative if something happens and you're not able to sell what you're selling to make money? Is there something we can fall back on to make the bank shareholders whole? All right, or the depositors. In this case, everybody in this room is a depositor at a bank or a credit union, for the most part, and that's who you're really borrowing the money from. So, from a microloan perspective, it's number one, number two. The credit and financial history of you personally is going to be very key for a microloan scenario. Have you been able to repay the debts that you've taken on personally in the past? And secondly, the character. This is the story. Have you been able to see a task through to its completion, to its successful completion? And success isn't necessarily a guarantee of future success. And in fact, sometimes people learn the most from their failures, and that becomes the story as to why the business is going to succeed. But those are the key functions, or the key parts of a microloan scenario. Now, going back to item number 4 in collateral, in the microloan, in the startup world, it's quite understandable that there isn't any business collateral. Either you're using factoring, to buy the inventory. And in that scenario, the factor owns both the inventory and the receivable. So the traditional collateral for a bank loan isn't there. And in those scenarios where the traditional collateral is tied up, perhaps in the past few years you've been lucky enough to finance your own home and have equity there. In the microloan and in the small business loan world, the personal equity in homes can be used to help support business transactions. Sir?
One of the form of collateral that I've seen used before is intellectual property by the banks. Looking at intellectual property, now that's becoming more prevalent as a key value
I
for most companies.
I understand the question. Is intellectual property becoming as viable as, say, a building like the one we're in, or the traditional accounts receivable and inventory sources of collateral for lines of credit? And from the bank's perspective, the answer is no. From the venture capital and angel funds perspective, yes, because those individuals in that industry have the expertise to both analyze and evaluate that intellectual property, but also have the wherewithal to go about and when your business isn't successful immediately, they can take it and make it successful. A bank isn't very good at that, in the same way that the bank isn't very good at taking foreclosed property and reselling it. So the principal business of the bank is to sustain go-forward businesses, not necessarily rely on the collateral to make the deal work or to make the bank whole, even though it's supposed to make the bank whole. And so, getting back to the point, intellectual property is very difficult for a bank to realize the value on. And as a result, it doesn't get as much strength as you would hope it would. 5 minutes.
We have
Oh, dear.
5 minutes. Okay, so let's, so we've kind of talked about developing a good banking relationship. And I think anything we do, relationships are key. And so having someone that you have a strong relationship with that is bought into your business, that you've started with, again, in my 30 years, I have clients that I still stay in touch with, even though I'm not at the bank anymore, but they became, friends because you build that relationship. For thinking about the time, I'm thinking I'm going to kind of just flip through these really quick, and then Frank and I can be around to answer questions because they have another workshop that needs to start in a few minutes. Does that sound okay? So we've kind of talked about this already, funding your business. We've talked a little bit about the banks, leasing. Leasing versus purchasing, that's a great topic. So if any of you are interested in that, you can see one of us about that because there's some great tips around leasing versus purchasing. Frank talked about some of the SBA 7A, microloans up to $50,000. Again, talking about different areas that are available. There's a great program called the Patriot Express Pilot Loan that I'm right now working with someone who's trying to start a restaurant. He just came home from Afghanistan about a year ago, and he's wanting to start a business. So it's pretty exciting. We talked about venture capitalists, investment clubs, investment bankers, private investors, or angel. Lots of different creative ways to try to find some money to get you started. Okay, so we ran through our 5 minutes, we ran over, but Frank and I will be available to answer any questions that you have. There are cards on the table that have the email and the website to the SBD Center of Silicon Valley. We also have workshops that you're able to attend. In the handout that I gave you, there is also an evaluation. If you would be so kind as to complete that, we would greatly appreciate it. And thank you again for your time.
Thank you very much.